Yeah, hi good people. It's another day. We're going to look at another question under the business data analysis. Today we're going to look at a cash flow question. This is an area that again they like testing. We shall go through this question. The following financial statement were extracted from the books of Mulima Limited. It was for the year ended 31st December 2022. For the year ended 31st December 2022. At 1st December 2022. So we've been given Mulima Limited. So this is a statement of profit and loss and a statement of financial position. And you're told investments are sold at a gain of 6 million. During the year ended at 1st December, depreciation charged on holding amounted. So this one should be on building. On building. Depreciation charged on building amounted to 1.6. No other building were acquired or constructed during the year. So during the year ended at 1st December 2022, an item of plant and machinery worth 60 million was acquired. And number 4, motor vehicle which had cost 80 million and with the accumulated depreciation of 54 were disposed of during the year ended at 1st December 2022 for 30 million. The total depreciation charge for the year for all motor vehicles was 30. So you are required statement of cash flow in accordance with the IAS International Accounting Standard. In accordance with the International Accounting Standard, and statement of cash flow as of that first. So statement of cash flow in accordance with IAS, statement of cash flow for the year ended that 1st December 2022. Just that, it's only one question that we need here to prepare the statement of cash flow. So I will prepare it here. Let me prepare it here. So Mulima Limited statement of cash flow of cash flows for the year ended that 1st December 2022. That way. Normal like using times New Roman and font 12. That way. And the control bold. Okay. I need this area that I will be using for my work, all of it to be under times. You just need to format that and a font 12 that way. And I will start with operating activities. And under the operating activities, you'll find that we have the profit after tax. Normally we use the profit before tax, but when you look at the statement, we have the tax payable. At the beginning we did not have something, at the end we had 30, which means the 30 was the tax that the provision that was made during the year. It means during the year we paid nothing. There is no tax that we paid. We just remain with a provision or a liability of 30,000. So in that case, we shall just use the profit after tax that we have been given here. Profit after tax, and they are shillings in thousand. Shillings in thousand. That control bold. So the profit after tax, we had it here. Then we do some adjustment. We had a gain on disposal. gain on disposal of investment in investment. Here the gain on disposal of investment. Let me just include it here. Okay, so gain on disposal of investment, and we shall put as a negative 6,000. I think we had it in note number 1. The investment was sold at a gain of 6. Yeah, negative 6,000. Again, let me format this area to include the bracket. Let's use the bracket instead of negative. I use bracket. Yeah, that way. Then the next thing we have been told, during the year, depreciation charged on building amounted to 16. So you have depreciation in building, deep on building, which amounted to 16. That is an uncash items. And the other thing, just adjust what we know. During the year, an item of plant worth 60 million was acquired. We shall deal with that later. Motor vehicle which had cost 80 and with an accumulated depreciation of 54 were disposed during the year. Yeah, so if we can look at these, whether it was a gain or it was a loss, the cost of this one was 80 and it had accumulated depreciation of 54 minus 54, and you get the NBV. So it means that the net book value equals, we had a net book value of that 26, and the disposal we sold it for 30,000, meaning that we have made a gain on disposal, of motor vehicle. In this case, gain on disposal of motor vehicle. So we sold motor vehicle at a gain, and this will be 30, and I minus this one, and I will have to include a negative sign. Okay, so the gain is a negative, so I need to get that negative. So I'll start with this and I minus this. Yeah, we sold it at a gain, so the gain, remember, we normally minus. Then the other thing, we are told the total depreciation charged for the year for all motor vehicle was 30. You have deep on motor vehicle, motor vehicles, which was 30,000. Yeah, the motor vehicles were charged at 30,000. For the plant, we are told we acquired, but when you look at this, when we acquired 60 in note number 3, during the year ended at 1st December, an item of plant and machinery worth 60 was acquired. If we acquired 60 and there was no any other disposal of plant, it means the difference will be the depreciation. Deep on plant and machinery, where we shall get this plus, we add 60 what we acquired, and we minus the figure at the end. So our depreciation was 18 for the plant, was 18,000, and I think that's all that we had there. So you can get the cash flow before working capital. Yeah, cash flow before working capital. before working capital, and here I'll just put articles to capture that. So we have 106. I'll control bold for that. Then we have our working capital. Just a minute. Let's see whether I will move these. Yeah, so that that one is okay. Okay, so that working capital here, and under working capital I'll start with the inventory. Just pick them directly. The inventory, the receivable, the payable, and we have even the accrued. Accrued is part of it, and I will do it here. Still, this is shillings in thousand. That way. Shillings in thousand. And I control bold again for this one. So when you look at inventory, what happened to inventory? It increased. An increase in inventory is a negative, so just put equals to this, you minus this, and I enter. So it was an increase. The same with the receivable. You can drag this to get the figure for receivable. It increased, yeah, by that. And the accounts payable, it will be the opposite. Look at the payable, it increased. An increase in payable becomes an income, because we are yet to pay. So we take the figure now at the end, and we minus the figure at the beginning. Yeah, and you drag the same for accrued. Yeah, that way you can get now the total cash flow from operating, because it did not pay any tax. Yeah, cash flow from, so this is cash flow from operating activity. Cash flow from operating activity. Operating activities, because we did not pay any tax. So here I'll add yeah, I need the sum of this, and enter that way. And under this one, expand the scope. Yeah, I think that one is okay. Okay, here articles, I need the sum of this one. Yeah, get 74. To that I'll put the top border of that, and I'll bold that. Then we'll go to the other part for investing. Investing activities. I'll bold that again, and under investing activity we shall start with the disposal proceeds. In this case it's hold up investment first, investments, and our investment, remember investment here at the beginning we had 56, at the end we had dash, so it means the total, and we sold it at a gain, so we'll take 56 plus the gain. Yeah, the gain was 6,000 on investment. I'll add 6 to get the total amount that we received. Then the other disposal, we have the disposal for motor vehicle, where the motor vehicle was disposed at 30. The disposal process was 30. And then we acquired acquisition of plant. Plant we acquired it for 60,000. 60. We've been told here in note 3, during the year ended at 1st December, an item of plant and machinery worth 60 million was acquired. So there was an acquisition there. Yeah, so there was an acquisition of 60. When you look at the building, I told it depreciated by 1/6. Yeah, during the year, depreciated on the building amounted to 1/6. No other building were acquired. When you look at the building, we can just deal with the buildings. What happened to the building? We started with 64. 64. It depreciated by 1/6. 1/6, and at the end we have 48. So it means we had a gain. Yeah, either we disposed the building. So for the acquisition, it's supposed to be a negative. When you acquired, that's a negative. The building is positive. And the other thing is motor vehicle. So what happened to the motor vehicle? When you look at the motor vehicle here, our motor vehicle, at the beginning we had 164 and we sold. Yeah, I'll start with 164 here. We minus what we acquired. Well, we sold motor vehicle. I'll minus the net book value because already this is net book value, and the figure at the end was 302. So it means motor vehicle we acquired, motor vehicle at 164,000. Then look at now the cash flow from these. I think that's all under that. Cash flow from investing activities. Cash flow from investing activities, which will be some. I'll add some of this. Yeah, 117,600. I'll bold this. Yeah, even this one I'll bold it. Yeah. Then you have the financing activity. Financing activities. When you look at the financing activity that we had, the first one is the shares, ordinary shares. The second one is the preference. The third one is the share premium. General reserve was constant. Revenue, when you look at the revenue, the movement in revenue is because of this. The retained profit was 18, and when you add retained profit brought forward at 25, you'll get the end. So the movement was just because of that. So when you start with this, the ordinary, it increased. Yeah, so it's a positive. Just check that minus this, and I enter, and I'll drag for the three of them. Yeah, so for the preference we paid 30, the others we acquired. Then what happens to the dividend? Dividend payable. So at the beginning we had this, so it will be this, and we add what was proposed during the year, and we minus what was at the end. We'll get that, so it will be the opposite to get a negative. We take this minus, can use bracket, this plus what was proposed of this. Yeah, so the dividend payable, which was a negative. I think that's all that we had under our adjustments. So our cash flow again here from that section, cash flow from financing activities. It will be some just need to add this, and I enter, get a sum of that value. I bold and I bold this, get the cash flow for the year, cash flow for the year, it should be alt equals, need a sum of the three of them, is one, and I enter. We have opening cash and a cash equivalent, and the closing cash and cash equivalent. We find that the opening cash, at the beginning we had only bank, and at the end we have still bank. This one, yeah, that way. You can put top and bottom border, yeah, that way. You'll find that our cash flow for the year, again we put the top border only for that. So you can look at the control here of the closing, this value, we are starting with this value, and you add this value, the opening, you find that it gives you the closing of 62,350. So that's how this particular question of cash flow was supposed to be done. Yeah, from Lima limited statement of cash flow for the year ended at 1st December. Yeah, the operating activities, the working capital, the cash flow from operating activity, the cash flow from investing activity, then we have the financing activities, cash flow from financing activity, and you get your closing cash and cash equivalent. Yeah, that's how it was supposed to be done. Yeah, continue subscribing for more content on this area and many other areas, especially on business data analysis. Thank you.